earnings, because that is the place which is abuzz. Allied Blenders and Distillers, the company reported soft revenue growth in the second quarter. However, saw strong margin expansion. The profit after tax also aided by lower finance costs. Alok Gupta, who's from the company, joins in now to give us more details about not only the quarter that went by, but more importantly, about the year that we are looking at the halfway mark. Thanks a lot, Alok, for joining in. And as you had earlier promised that there would be margin expansion, you've delivered on that. So the question here is that, one, how much of your ENA has been captive versus last year? What is the plan here by the end of this year? And as a result of which, what do you see as margins by the end of this year?
Thank you very much. First of all, very happy Diwali to you and to your colleagues. The ENA captive percentage remains the same. We have one unit in Rangapur where we produce about 60 million liters of alcohol. So there is no change in terms of captive ENA versus non-captive. So that's really where we are on the captive consumption. As far as our margins are concerned, you've seen the Q2 results, and as we've stated earlier, I think the focus really is in terms of the midterm, how do we get to industry parity EBITDA, which we pegged at 15%. So moving forward, we do see and stay confident about a consistent margin expansion, but it'll take us maybe a year or two to get to the industry EBITDA levels.
Follow up on that, you said that your captive is still at where it was the last time. If you could give us that absolute number, because I remember you saying that you want to, get to 100% captive sourcing.
So it's roughly about one-third. One-third is captive and two-third is bought-out ENA. That's the split.
And by when do you get to 100% captive sourcing?
We are looking at FY27 to be able to get to that number.
Got it. All right. And margins gradually are seeing an improvement towards mid-teens. Quick question for FY25, should we be working with a revenue number of around 3,750 crores with EBITDA number of close to around 350 crores? Do you think that's doable?
Well, on the first one, we really need to see how the industry is heading. As you know, the industry has been fairly flat, H1. We get to see what really is the impact of the festive spirit. We do expect some bit of turnaround. So I think we'll have to really see on how the industry responds. So I will be sort of cautiously optimistic on hitting that number. The EBITDA number that you have indicated, my sense is we should meet or exceed that number.
All right, you should meet or exceed that 350 crore mark. The first half of this year, you're 180 crores. So even if we double it from here, closer to 360 crores, maybe if you're lucky enough with the top line, closer to 400 crores as well. Just on the top line itself, you said, you have to see how the industry pans out in the second half. There has been some softness. This quarter as well, your volumes were absolutely flat. So what's your volume target for this year?
Our volume target for this year is roughly about 35 million cases. Our focus continues to be on the P&A segment and continues to be on profitable growth in mass premium. So when we look at our volume growth, essentially we see through a lens of where do we make money on our mass premium, which is our flagship brand and officer's choice. And sometimes we leave volumes on the table where we're not making money. The absolute focus is on P&A. So the growth that you're seeing in quarter two over last quarter, essentially larger part of the growth is coming from P&A, which also reflects in our revenue growth. Only on the EBITDA number, just one thing that I would like to point out is that our Q2 EBITDA is 105 crores. So while H1 EBITDA is 181, as you rightly pointed out. So I think if you take the Q2 EBITDA and were to draw a forward curve, that might give you a better sense of where the year could end up.
Okay, all right. Alok, when you joined us, you had told us at the time with the IPO that you're, I think, at around 45% P&A, and you're looking to take it to 50%. You're almost there. You're at around 49% odd. So for the second half of the year, you see it stabilizing at around 50%. Point number one. Point number two, what about on realizations? Your creep kept up a bit because of this higher, better mix that you're seeing. Does it go 1,000 rupees and beyond? Where is that headed?
I think the P&A contribution is on track, and I think we'll meet the promised number. We are also seeing significant expansion in our gross margin. As you would see, there's roughly 250 basis point improvement in our gross margin. That is also a reflection of a better product mix and also better choice of markets where we sell. So I think these are two things that we are sort of very sharply focused on: sell profitably and pick up market shares that really matter in terms of margin expansion.
All right, final question then before we let you go. 96-97% of your revenue is still from whiskey. but you've had new launches, you know, premium vodka that you've added, Zoya as well, the luxury gin. You've expanded from Maharashtra into Goa and Rajasthan. Even Iconic, which is now about 4.5 million cases. Where do you see this whiskey and non-whiskey mix head in the next couple of years?
I think whiskey will continue to be north of 90% of our salience, largely because India is a whiskey consuming country. Almost 70% of consumption comes from whiskey. As far as Zoya is concerned, very happy to share that we've opened up the export market. So Zoya is not only available in India now, but it's also available. It's now available in Dubai, and by end of this year, it will be available in 4 more countries. And this is a point that even I covered even earlier. There are a lot of focus on brands that have been built by us to have a global focus. Iconic is on a trajectory to be a 5 million case brand. So extremely happy about where the brand is heading. It continues to sort of grow in the existing market. We are opening up Karnataka and Andhra this quarter. Those are 2 large markets as for us.
Okay, all right, Alok. Appreciate you joining in. Cheers to the second half of the year. The first half has been quite good. The takeaway for me is 350 crores is well and truly on in this year. You're looking to exceed that. Wishing you and your entire team a very, very happy Diwali from here on. Well, let's slip into that short break. You come back. We'll be chatting with the management of Ask Auto. The MD and CEO, Mr. Kuldeep Singh Rathe, is waiting for us.